ready to speak with us. Titan is the company I'm speaking about. Reported a good set of second quarter earnings aided by a one-off gain in its jewellery business. The sale of gold ingots worth 482 crores also aided the revenue this quarter. Ashok Sonthalia is Chief Financial Officer at Titan. He's joining us right now to take some questions. Let's start, Mr. Sonthalia. Good morning. With the jewellery business, which is the biggest for you. I was reading that new buyers in the jewellery space accounted for about 50% of the overall sales. How should one read that? I mean, is that an unusually large number? And that would also mean that you are rapidly gaining market share. Can you address both those points?
Good morning, Prashant, and good morning to your viewers. Thank you for having me here. Yes, you are right. In quarter two, roughly close to 50% was new buyers, and it is not unusually high. It's a trajectory. A couple of quarters back, it was 42, 43. Quarter one, we reported about 46%, and now about 49% of customers are new buyers. This gives us confidence that definitely we are gaining market share. Some of the customers from the competition are coming and kind of experiencing us. So it's a good thing for us, and we are very happy about that.
Hey, Mr. Sonthalia, good morning and congratulations on a good set of numbers. But you have chosen to refrain from giving a guidance for Q3. Why is that? And do you think that you could continue to see this run rate? You've done about 18-19% growth in the festive season. Is that a one-off, or is that something that you can sustain through the year?
So we have started very well for the festive quarter. First month has been very good, and I must remind you that quarter three last year was also very strong, with some spillover, pent up, all sorts of kinds of things because of the disruption of COVID. And in fact, this 17 to 19% amongst various categories which we witnessed in the first 35 months of festive season is very, very good and very strong. And we are very happy about that. Extrapolating that for the full quarter three may not be right, but that gives us confidence that quarter three should be turning out well for us.
Okay, hi Mr. Sonthalia, this is Nigel on this side. A two-part question. One is your market share. You're gaining market share, you're currently at around 6% odd. When do you see it go to that double digits? That's around 10%. And the second factor is on the studded business. That was, I think, around 32% in the past quarter.
Right.
What is the steady state number that we're looking at? I think you had ambitions in the past to move that higher as well. So, clarification on both these 2 points.
So, on the studded part, this quarter was 32%. Growth was very good, particularly on high value studded. 37% last quarter to FY20, which is pre-pandemic quarter, was slightly aberration because all of a sudden gold prices have moved in that quarter substantially, and that is where studded percentage was high. Gold jewelry sales was slightly lower in that quarter. And quarter two is typically a studded quarter, where we do activation and a lot of promotion of diamond jewelry. So from that point of view, 32% is a good number. We want definitely to progress. But as I was talking earlier also, that we focus on all categories within gold, within jewelry, within diamond. And these generally becomes an outcome for us. But on a large scale basis, our endeavor is to kind of inch up this number slightly. But we are happy with the growth in overall absolute number of diamond category and the high value studded for us.
The market share?
Nigel, if you can repeat your first
Your market share, sir. Market share, you're gaining market share. It's at 6%. When does it go to 10%? You have an ambition, but give us a timeline.
So FY27 vision, which we have presented, that we want to be 2.5x in jewelry business. And considering the long-term jewelry industry growth trend, and we are hopeful that we will deliver that, we should be closer to 10% by that time.
By 27.
At least 9. Yeah.
Okay.
All right. Just a quick point. You've highlighted that you are, Mr. Sonthalia, seeing some pressure in the sub 50,000 to 1 lakh price category. But the high value segment is doing very well, so that kind of more than offsets that. But is this a worry, the lower end of the price sort of range products doing, or maybe the value of purchase be below a certain level doing poorly?
Okay, so this is across categories. It is not only jewelry. We are seeing in watches category, eye care category. It is the entry price points which are growing slower than the premium and high price points. And that's right now to do with something I would say macro inflationary headwinds, where the bottom of the pyramid gets impacted most, and the food prices inflation, energy prices inflation hurts them most and further shrink their discretionary budgets. While mid-market, premium market seems to be slightly unaffected because of that and continue. So over a long term, we really don't see that this continues to play out that way. When we also look at say 3-year kind of horizon, we find both categories are growing pretty well. Some quarters up and downs happen. Maybe this bottom pyramid thing may continue for maybe another 2-3 quarters more before it comes back for us. But that's an important category for customer enrollment for us, because the new customers many times enter from that category.
Okay, and that's an important takeaway as well. We are noticing it in other sectors too, right? Premiumization has picked up quite a bit, especially in sectors like autos. I wanted to understand a little about store openings. You've guided for 35 to 40 Tanishq store openings this year. Will you stick to that? And also in the international space, right? You've said that you expect the international business to be 2,500 crores in the next 5 years. Can you give us a slightly more shorter term outlook?
So 35 to 40, we are sticking with that, Sonia. So 35, definitely we would like to achieve this year. But what doesn't get reported or understood, that a lot of existing stores are expanding. And, some significant retail square feet spaces are getting added to some of the premium stores. And that number, unfortunately, doesn't get captured, but it just gets captured in the retail space, which we also disclose. So we are very, very optimistic. Not only Tanishq 35-40, Mia is going to add about 50-60 stores. Carrot Lane is very aggressively adding another 50-60 stores. Zoya for the first time adding, after some gap, a couple of new stores. So store expansion is on track. Store expansion is keeping in mind our aspirational targets for FY27. And we are working on that. As far as the international is concerned, we are very happy. Already 5 stores are functioning in UAE. The first store in US has been getting delayed for some reason or the other, for some permission or the other. Hopefully by November end, that should also be up and functioning.
Okay.
We believe that whatever guidance we have given for 2,500 crore, we should be able to achieve earlier than that, because it is just our ability to establish and operationalize the store. After that, customers are just willing to embrace us with open arm, and we are finding very, very positive response in all these stores which are functioning.
Very quickly, sir, just doing a rough math and going by all that you said, should you end the year in that vicinity of around 37 to around 40,000 crores in revenues? And on the margin front, are you being conservative? Because you're doing margins, higher than what you have guided for in Q2. But for the year, you're still, guiding for a little bit lower margin, 150 basis points lower. Quick clarification on both these 2 points.
So, of course, Nigel, we are not giving guidance. I think we will allow our results to kind of give you guys confidence about our full year trajectory. As far as margin is concerned, there were certain one-offs benefit which came to us and margin has been higher. Our guidance for jewelry segment has been 12 to 13% EBIT margin, or eye care about mid-teen margin, and watches about 13 to 14% EBIT margin. All these businesses, the priority is growth. Keep investing into brand, market share gain, customer acquisition, and deliver a stable margin profile. Competition is getting intensified across categories. We need to be mindful of that. While Tanishq remains a very, very premium and aspirational brand, but we need to be providing value to customer as well.
Got it.
That's where a bit conservatism comes.
Okay. Sir, thanks a lot for joining in. All the best. You have delivered great returns to shareholders in the past. Hopefully, you'll continue to do that in future as well. Thanks for joining us on CNBC TV 18. By the way, the market has come off.